everyone, and welcome back to Earnings Call. My name is Jeffrey Beamer. I am the Senior Investment Strategist over at ewotrader.com. And if you've been with us for a while, you know we don't just talk about stocks and or earnings. We talk about how to profit from company earnings announcements, okay? The week here of August 17th, 2026 shifts the earnings spotlight towards retail, and then also some technology, semiconductors, and two Chinese stocks. Big ones, okay? And then there's several large cap names that are capable of moving their sectors announcing earnings results this week. So the retail group is what is really in focus here. And this group is particularly important with Walmart, Target, TJ Maxx, Lowe's, Home Depot, and ROST stores all reporting this week. Results should help determine whether consumers remain resilient and where spending is shifting across all income levels. So we're going to go through the list. We're going to take a look at the best potential candidate for a trade this week, along with trade update and a new opportunity for you, all starting right now. Each and every week, we do talk about earnings, and here is our list for this week. You will notice here it's broken down into two columns. The column on the left is our breakout stocks. These are stocks that on average or have an estimated move currently of double digits or more, meaning they move 10% or more on a regular basis through their earnings announcements. On the right-hand side, we have our quiet list. These are companies that usually move single digits through their earnings, okay? So they're not really huge movers, even though a 7 or 8% pop is a nice move, okay, either up or down. It's still single digits, okay? Where the real excitement lies with some of these earnings announcements is on the breakout stocks, okay? But the quiet stocks, they're the quiet income generators that we like to trade, and there's different strategies for each type of opportunity. The breakout stocks, we do straddles and strangles. The quiet stocks, we do a premium selling strategy that is limited risk called an iron condor. So you'll notice our list here. Look where all those retail stocks are. They are on the quiet side of the list. All right, so we're going to talk about them. Let's start with the quiet list this week. Let me show you an example of a quiet stock. Even though there seems to be some volatility here with McDonald's, you'll notice that I've highlighted the earnings announcements here on the list. And through each earnings, McDonald's is a pretty quiet candidate. This is one of our favorite stocks to trade through earnings just because it's such a big company. It's really hard to move the needle with their results. All right. And it usually moves single digits. So selling premium around the earnings events because implied volatility is high. That makes options more expensive. Doing that selling premium strategy is often the best way to go, and it generates a nice income stream for us every quarter here on McDonald's. So who's up to bat this week? Well, as you saw from our list, okay, we'll start going through the list and we'll look at the charts. We have really starting tomorrow is Home Depot. Baidu is one of the two Chinese stocks I was talking about. The other, by the way, is Alibaba. And they did not appear on the list just because of there's some better candidates on the list where Alibaba announces, but they do announce this week. You'll see a premium home builder there with Toll Brothers, big manufacturer and farm equipment manufacturer, John Deere, later in the week. So let's go through the chart and take a look at some of these. Okay, and we're going to start with Home Depot here. Okay, Home Depot will announce tomorrow morning. That'll be Tuesday, August 18th. This will announce before market open. And the average move here is just 5%. So you'll see here that, this stock was in a nice little downtrend through the spring, okay, and then has started to rally higher and has literally gone from almost $400, well, high 300s, all the way down to 300 itself. Okay, almost a $100 move in just a few months, and now has back up, hitting 350, 360 currently trading at 338. I'm not worried about all that type of move. I'm just concerned with the earnings announcements. And Home Depot is a pretty consistent mover of around 5% through earnings. And its current price at 338 is really in the sweet spot for our selling strategy, because a stock that is priced especially over $100 gives us a lot of room to go out of the money and get decent premium as we come into earnings to sell ahead of the earnings announcement. Okay. Now, Baidu does appear on the list as well. Okay. Baidu announces tomorrow morning. The average move here is 6%. And something interesting that I noticed upon research is Baidu has a pretty consistent downward pressure around earnings. Okay. In fact, you can see the last two announcements, even though announcement day, the stock closed a little bit higher, it sold off during the day, and then follow through was to the downside. Previous announcement before that, you can see was down and a little sell off. And let's see the other previous to that, look at that sideways action. It did end up rallying, but that was 2 weeks later. Okay, so we'll see what Baidu does tomorrow. See if that continued downward pressure continues for Baidu. But that's just kind of a side note there. Let's talk about Toll Brothers. Toll Brothers is a premium home builder. They are a custom home builder nationwide here in the U.S. Okay, they will announce tomorrow after market close. The average move for Toll Brothers is about 5%. Okay, so they can have a little bit of volatility here. Priced at currently at 146. You could see a good 6-7% move out of the stock, but again, that 5% is the average combined with the estimated move here, and that's what we're really looking at. Good consolidation pattern here as we come into the earnings announcement. So we might get a little bit of movement up or down, but probably within the average move area. Okay. Now, Analog Devices. This one's going to be interesting. All right. They will announce Wednesday morning. That will be August 19th. The average move here on Analog Devices, ADI, is just 5%. Now, because of the space that they're in, there may be more volatility here. Okay. So I would possibly sit on the sidelines for this one. But given that this is right around a $400 stock, this is usually right in our wheelhouse. We do tend to like trading ADI, but we might sit this one out depending on what the feel is. We really only have about 24 more hours before we need to make a decision on that, but we might be sitting that one out this go around. Now, Lowe's. Okay, so we got Home Depot and we also have Lowe's announcing results this week. Look at the sideways pattern that Lowe's has been in after the decline here, just kind of bouncing around. They will announce before market open on Wednesday. That will be August 19th. And the average move for Lowe's is just around 4%. Okay. It does tend to gap around earnings sometimes. But again, that gap could be right at 4, maybe 5%. And then we moderate from there. But that 4% number has also around the historical average for the stock. Okay. Now, key name here, we really want to watch two companies in the retail space. One of the twos is Target. Okay. Now, Target has really been on a run here lately. They will announce Wednesday morning, August 19th, before market open. And let me just double check that because I see a different date there for Target. Let me just double check that because I may need to correct it. Yeah, Wednesday morning. Okay, so let me just move that line over. There we go. Like having everything correct here because data is important there. So Wednesday morning, August 19th, before market open, the average move here for Target is just 7%. All right, which is on the high end of our single digit movers. And it's been on a bit of a run here. Now, we're going to use Target as a guide for another big company that I'll talk about in a moment. But before I get to that one, let's talk about TJ Maxx here. TJX Group, okay, they will announce Wednesday before market open. That will be August 19th. The average move here is just 4%. And you see the last move here. Look at that gap higher and then a big run. Well, that was only about a 5% move there. So this is pretty consistent. And in that 4 to 5% range is where this stock likes to trade. So we'll keep an eye for that as the retailers are, the big retailers are all here in a row. Now, here's the one that also one that we'll really be watching, and that's Walmart. Okay. Now, you'll notice here some distinct differences between Target and Walmart. Now, Target is on a bit of a run here. It's up over 20% year to date, while Walmart is only up about 3 or 4% year to date. Now, that's year to date. Overall, over long term, Walmart way outpaces Target, but Target's playing some catch up right now. So we're going to use Target as kind of a key number to watch and kind of compare that to what we expect for Walmart. Walmart will announce on Thursday morning. So that's August 20th. So this Thursday before market open. And the average move here for Walmart is just around 4%. All right. So we're expecting a pretty typical move here, but Target is going to help key us off of what to expect from Walmart. And those two could be very different or they could be very similar. All right. Now moving on, John Deere has been picking up the volatility here a little bit. It's still a quiet stock, but it has been, as you can see here from the last two earnings announcements, gapping around a little bit. Now, while these are not huge gaps, all right, it is up there around 7%. What this means is really, if I'm looking at selling premium, I'm trying to get on a stock like this, probably over 10% out of the money for my sell legs. And then I'll add my buy legs on top of that, wider than that. Okay. But it's all about how much premium we get for that. Because yes, you could go way out of the money and just sell stuff that's, pennies on the, pennies, you're picking up pennies. But doing that is a recipe for disaster at times, depending on the stock. So, there is definitely a kind of a wheelhouse that we like to stay in for that risk on return number. All right. And that's what we pay attention to. And I'll show you an example of that for what we do for our subscribers here in just a moment. And that is what John Deere looks like. Two more here on the quiet list. We do have ROST stores. They will announce on Thursday after market close. So that'll be Thursday, the 20th. Okay. I put the 21st there, but that would be the 20th, and that would not be of May. That would be of August. So that May 21st was the last announcement. Here is August 20th after market close. The expected move here is 8%. So along with John Deere, ROST stores also is picking up on the volatility a little bit. So I would definitely kind of watch ROST stores here this week because they're getting up there to that breakout category of being double digits. And, that catches people attention when they start doing that. But you'll notice the chart pattern is more like Target. All right. It's in that upward sloping, definitely been gaining some ground here, going from about 190 to 250 in about four months. So nice little gains there for ROST stores. And finally, out of the retailers, we have BJ's Wholesale Club. They will announce Friday morning. That will be Friday, August 21st before market open. And same thing here, more volatile than Walmart typically. Average move here is just 7%. So again, around a $95 stock, kind of hard to go 10% and still get decent premium, but we'll take a look at it definitely for BJ's. But also definitely one to watch because it would be definitely in the space of Costco, right? And Costco doesn't have earnings for a while, not until September. Okay, so they're a ways off, about a month away for Costco, but this could be definitely give us a heads up for what to expect maybe from the wholesale group. Okay, so that is our quiet list for the week. Let's go back and look at the breakout stocks. Now, again, if you haven't really seen what a breakout stock looks like, let me give you an example here. This is Akamai. Now, Akamai does not have earnings this week. They just recently had earnings. This is a breakout stock. You can see the ellipses around the moves. It gaps. I mean, like crazy. This last earnings announcement, it actually moved less than its average estimated move. Okay, market makers got it wrong on this last move. Okay, they were expecting about a 16% move on the stock, and the stock, moved single digits. But prior to this stock is a mover, historic mover, and one of our favorite stocks to trade with straddles or strangles. Okay, we like trading straddles or strangles going into the earnings announcement, hopefully getting in before the implied volatility gets too high. But that implied volatility rush sometimes makes us profitable on our straddles and strangles before the event. But we sometimes then stay after the earnings announcement to get that pop or that drop on these volatile stocks. So what does our list look like? Okay, for this week, it's pretty quiet. All right. We have a new stock on our list, and it's new to our list. It's not a regular, and that's Klarna. Okay. Klarna went, they IPO'd earlier this year. They've had a couple of earnings cycles under their belt. We're now starting to get into a rhythm of what to look at there. But we have Mercury, Bill.com, and then Advanced Auto Parts, which is an interesting one. So let's go down the list, and let's start with Klarna. Okay. Now, they will announce tomorrow morning, Tuesday, August 18th. And the average move here has been about 11%. Now, I mentioned that Klarna went IPO earlier this year. So it was back here, last year, last September. All right. And so it didn't have a lot of earnings to go off of. But this 12% move last time, this move here, which had some follow through to the downside, and then a prior one, I think it was back right. I think it's right there. Let me see where. If nope, I don't have the dates on here, but I think it was right there on November. All right. Anyway, how we handle this is like we did for SpaceX several weeks ago. We look at where the options market is pricing out the options. There's an options pricing formula there's actually several of them. You pick one and then you stick with it to get your estimated moves. And it's coming up double digits, so around 11-12% for Klarna. So we'll keep an eye on that as it's entered our list for the first time this week, and is kind of in a nice little sideways pattern here going into the earnings announcement. So we should expect a nice pop or drop tomorrow, and we'll take a look at that and how that result comes out. Mercury, this is Mercury Systems. Mercury is one of those stocks that if you just type in the word, there's tons of Mercury companies with the name Mercury in them. So Mercury Systems. MRCY is the symbol here. They will announce on Tuesday, tomorrow, after market close, and the average move here is 12%. Now, this stock is a little bit more expensive, up in this $100 range. So you could expect to pay several hundreds of dollars for a straddle or strangle here. And again, you don't want to be, if the average move is 12%, but you price out your straddle or strangle and it's going to require a 16% move in the stock, then you probably don't want to trade on that. What we look for is that little disparity where, and I'll show you an example of that here in just a few minutes. If you hang with us, I'm going to show you an exact example of that here in just a second, where the average and implied move is less than, or your pricing on the straddle or strangle is less than what the average implied move is. All right. I'll show you what that looks like here in a moment. All right, so let's talk about Bill.com. This is the one, quite honestly, that I would really pay attention to this week. This is right now a $48 stock, right around $50. They will announce Wednesday after market close. That's August 19th. Average move here is about 13%. Okay. Now, given their space, I would definitely be pricing this one out. This would be suitable probably for smaller traders as well as larger traders, because you want to get, usually with the stock trading around $50, you're going to be paying, don't want to really pay more than 10% for your trade if you can get in at that level. Sometimes you can't. Most of the time you can't, but every now and then we can. So here you would expect to pay $400 or $500 for your straddle or strangle, and then make sure your estimated move is less than where your break even, or is more than where your break evens are in the trade. How to handle that. Let's finish out with Advanced Auto Parts. All right. This one also is one to watch because really of the pattern here, you'll notice that it's been chopping around since May in kind of a horizontal pattern, and now it's kind of forming a little bit of a wedge here. Okay, so it's small. Okay, but and we could actually come down from there. All right, so as they come into these little points of constriction and build up energy for a stock that has an average move of around 17%. I mean, this stock is a mover. All right. And you're going to be paying $600-$700 for the straddle or strangle here. So you want to be sure that this thing does move around earnings. And that is definitely an opportunity. So Bill.com and Advanced Auto Parts are two that I would just keep an eye on, really. Well, of course, all of them, but Klarna and Mercury. Klarna is new. Mercury is actually new to our list as well. I would just kind of keep an eye on those because of their newer track records. All right. So that is our list. Let's take one more list at the broader list. There's over 200, right at 200 companies announcing earnings this week, and we're only focused on about 26 of them. And I've highlighted the biggest and the kind of the core group here on my list. These are the ones where we're really zeroed in on and have great focus on. All right. So we try to whittle out all the small caps and those that don't have a lot of options traded on them. We try to whittle those out and bring you kind of the premier list each and every week right here on Earnings Call. All right. So each week, as you know, we give out a trade. We talk about, hey, what's the trade of the week and that sort of thing. I want to show you what our trade of the week was last week. And that was SMCI. Okay. Super microcomputer, SMCI. We did a strangle on that. And this is almost a textbook example of how the trade comes out. Okay. So we entered the trade. We talked about it Monday. We entered the trade. SMCI had earnings. So how did it do? All right. Well, actually very nicely. Our strangle had a 129% return in 3 days. Okay. It just set up perfectly. Our cost to get in was reasonable, related to the average expected move of the trade. And to subscribers of our earnings club, which is ridiculously inexpensive to subscribe to, okay, you'll see here that I included the entry. Okay, this is what I send out to subscribers. I wanted to show it to you here. We send out an entry. We send out the strikes, the pricing, everything. Then we had earnings, and I sent out an update. I sent out an update that pretty much gave the results, how the conference call went, and then what our intent is. And actually, it was a hold for, I said, let's see if there's some follow through to this. Okay, meaning follow through to the upside. The stock had gapped out, and you'll see right there the next day we had an exit. All right, the alert, the stock started running higher the next day. Good follow through. That's what gave us our very nice profit. a little over $500 per strangle, okay, per strangle, and a 129% return on risk was the total in just 3 days. Almost a textbook example, but I wanted to highlight kind of what subscribers get. They got the exit alert, and actually after the alert went out, which you received by email and SMS alerts, okay, it kept going up. The stock kept going up. So many of our subscribers got out for even a better price than what we got out at. Okay. After the alert goes out, we timestamp it, and then we get out. That's our exit. But the stock kept running up. Before, in the late afternoon, it started selling off and came back down. Okay. Still was up for the day about 4%, but during the day it was up over 10% during the day when we exited. So great execution on SMCI. That's what we like to see. So our trade for this week, well, I hinted around it quite a bit, I think. All right. Our trade this week is on Walmart. Okay. Pretty consistent mover. And we are expecting kind of the same this week. Last earnings cycle, it had a little bit of volatility around earnings, and it challenged our trade a little bit. But we've had so many winners with Walmart. We're going back to the well, as they say. And we have an iron condor on Walmart as our trade of the week this week. So this trade will go out to our subscribers with the strikes and the pricing and everything. But for those of you that know how to trade an iron condor, you can go right to your option data tables and create the trade and make sure that it meets the requirements that we have, where you're getting outside of the estimated move. And that is our trade of the week this week. So I hope everybody enjoyed the session today. Great week of trading. Lots of opportunities this week. Everyone have a great trading week. We'll talk about Walmart results next week, so you'll want to join us then. Otherwise, everyone have a great trading week, and I will talk to you then. Take care.